Imagine this. You've just finished a major project in your business and you're excited to see those profits start rolling in. But instead of celebrating, you get hit with an unexpected IRS audit. And that audit leads to penalties and fines that you did not anticipate. If you're running an S Corp, there are some crucial mistakes that you can make when you're running your business. Stick around because we're going to talk about the 3 biggest mistakes that you might be making in your S Corp and how to avoid them. If you don't know me, hi, I'm Jamie Trull, CPA and financial literacy coach, and I specialize in giving you all the tools that you need to stay informed, organized, and profitable in your small business, so make sure to like and subscribe. Now, as always, make sure to stick around to the end of this video because I'm going to give you some special tips to make sure that you can stay in the good graces with Uncle Sam. So let's start with mistake number 1, which is a biggie, y'all. Okay, so this is a huge one. And the first mistake is not documenting your salary and distributions properly. Now, there are S Corps that don't pay themselves salary at all, and that definitely is an IRS hot button, especially if you are taking distributions out of your business and not paying yourself a salary. So you definitely want to be paying yourself a reasonable salary in your business. That is going to be the first thing they look at when they audit your S Corp. And even if you are paying yourself what you feel is a reasonable salary, you got to make sure it's documented. Because just because it feels like the right amount to you, that's not going to stand up when the IRS comes and asks you how you came to that number. And you're going to have to support why that is reasonable. And that is a very difficult thing to do if you haven't documented that already. Now, the IRS has even stated publicly that this is a big point of audit that they're really going to be focusing on with their S Corps. So if you haven't yet, I would absolutely make sure that you know how you came up with your salary and that you have it well documented so that you can be supported if and when they come and ask you about it. Now, if you want to dive into more of the nitty-gritty when it comes to setting your salary in an S Corp, I just happen to have a masterclass coming up that I want you to be a part of. It's called the Savvy S Corp Owner Masterclass, Getting Your Salary Right. And I definitely want you to join because we're going to be talking about how exactly you should be coming up with your salary. What are the different ways to do this? And how can you make sure that it is documented properly, that it's going to be great support when the IRS comes a-knocking? So go and sign up, jamietrull.com/salary. If by the time you're watching this, the live event is done, there should be a replay that you can catch of this masterclass, and you do not want to miss it. So what happens if you get audited by the IRS? They don't agree with your reasonable salary. Well, in that case, what often happens is they might reclass any distributions you made to yourself as salary, meaning all of a sudden you're going to have to pay those FICA and Social Security taxes of about 15.3% that you probably did not plan on. Plus, as always with the IRS, they love to throw interest and penalties and all the other things at you in this case. So we don't want that to happen. Make sure you have documented well your reasonable salary calculation. The second most common mistake I see made when it comes to potential IRS audits and penalties is thinking that just because you aren't profitable or aren't very profitable, that you don't actually have to pay yourself a salary in your business. I get this question actually quite a bit where people who are S Corp owners say, well, I only made, $10,000 in profit. How am I supposed to pay myself a reasonable salary, right? And they think that just because they didn't make a lot, that those salary rules don't apply to them. And unfortunately, that is not how it works. Now, obviously, if you don't have the cash to pay yourself a salary, they're not going to make you do that. However, if you have taken any money out of your business, say you have distributed money to yourself from your business, that money is going to be reclassed to salary under audit because the IRS wants to see that you have paid that reasonable salary before you pay yourself any distributions. Now, that doesn't mean that you can't take distributions out of your business until you have fully paid yourself out your salary in a year. It just means that on the whole, in a year, if you have not paid yourself a reasonable salary, but you've taken distributions out, those distributions are going to be reclassed as salary, meaning you're going to have higher taxes on that probably interest, probably penalties. So don't think that just because you're not very profitable that these rules don't apply to you, because they still do. Now, when people do ask me this question, the question I have back for them is typically, are you sure it makes sense for you to be an S Corp? Because if you're not very profitable or even are typically at a loss position in your business, you're not getting any benefit tax-wise for being an S Corp. That tax benefit comes in the fact that you have additional profit above and beyond your salary to distribute to yourself that is taxed at a lower rate. If you're not very profitable, you're not getting that benefit. And in fact, being an S Corp is probably costing you more than it is saving you. So definitely look at that and decide if it still makes sense for you to be an S Corp or if you want to revoke that election. And mistake number 3 that I see coming up under audit for S Corps is misunderstanding the rules around deductions. They do differ from what the rules were when maybe you were taxed as a sole proprietor. Before you made that S Corp election, you had certain rules on how you could deduct expenses that may be different now that you're an S Corp. And sometimes we don't necessarily adjust to that and create the formalities that are now necessary as an S Corp that you didn't have to do before, even if you were an LLC. So a lot of these things are around the treatment, let's say, of split business and personal expenses. So let's say you have a cell phone. When you were a sole proprietor, you deducted a portion of your cell phone. Maybe you work from a home office. You were deducting that portion on your taxes directly. When you are an S Corp, the calculations are different, and the way that you need to go about doing that is different. Remember, you're now an employee of your business, so you have to treat yourself just like you would any other employee. So rather than deducting those types of things directly, you're actually going to be setting up more of an employee reimbursement plan called an accountable plan. And you're actually instead going to be reimbursing from the business to you personally, making sure that you're keeping all of that documentation just like you would require from any other employee to show that those reimbursements are due to you. So those are things that a lot of companies don't really realize. They may continue to take things like mileage, but you don't deduct mileage directly to your S Corp in the same way that you did when you were a sole proprietor. And there are other things that can be treated differently as well, like retirement contributions or health insurance premiums. And that treatment can change when you make the switch over from being taxed as a sole proprietor to being taxed as an S Corp. So it's really helpful to understand some of these nuances and rule changes, and that's not something that your accountant always tells you about. For instance, I talk a lot on this channel about hiring your kids. I'm a really big fan of hiring your kids in your business and the tax benefits and also just the general benefits of being able to set your kids up for success. However, the treatment of hiring your kids and the tax effect of hiring your kids is different for an S Corp versus a sole proprietor or LLC without an S election. In fact, it's a heck of a lot more tax advantageous to be able to hire them through an LLC or a sole proprietor and not an S Corp. And those are things we might not be realizing or thinking about when we're making the decision on whether we're going to become an S Corp or not. So I recommend, if this is you and you're not sure if you're doing things correctly, make sure to ask your tax accountant how these things should be handled if you need to make changes. And again, you're going to want to have a reimbursement plan, such as an accountable plan, even if it's just you, even if you have no other employees in the business but yourself, you're going to want to have that accountable plan documented that basically spells out what you get reimbursed for. And I know for me, I actually reimburse myself through payroll just like I do any of my other employees. So if I travel and I have mileage, I document that mileage, I put it in the same place I have my employees document any of their travel expenses, and I actually reimburse myself through payroll just like I would otherwise. And remember, reimbursements are tax-free. It means you're not being taxed on that income, which is why it's important. You don't want to just ignore it, right? You want to make sure you get a deduction for it because you don't want to be paying taxes on income that was really just a reimbursement of money that you spent personally, but you want to make sure you do it right so that it doesn't get reclassed and you don't get additional taxes and fines and penalties down the road. Okay, there you have it. Those are the 3 biggest mistakes that I really see out there when it comes to S Corps that could lead to fines, penalties, etc. under IRS audit down the line, which nobody wants. Now remember, one of the biggest and probably the biggest hot button issue with S corporations is how you pay yourself. So make sure to come to the masterclass that I'm hosting, where we're going to dive into this, and so that you can really understand the rules around salary to make sure that you are protected. So definitely come to that masterclass all about getting your salary right at jamietrull.com/salary. If you found this video helpful, definitely make sure to give me a thumbs up, give me a comment down below, and I will see you next time.